My name's Dave Dubeau, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
Hey folks, on today's episode, we've got an interesting guest who's kind of going against the grain, not one way, but two ways. He's going against the norms when it comes to the market area that he's focusing on investing in, especially in multifamily properties. He's kind of counterintuitive that way. He's a little bit counterintuitive in the folks that he's looking for and attracting as his ideal investor avatar as well. So zooming in from Los Angeles, California, we've got Vaibhav Puranik. Vaibhav, welcome to the show. Great to have you.
Thank you. Thank you very much, Dave. Thank you for inviting me to your show.
My pleasure. So Vaibhav, give us a little snapshot of, number one, what your current portfolio consists of, what kind of properties you have, kind of what your buy box is. And then number two, the market that you are focusing on primarily these days.
Absolutely. So I've done like 6 deals so far in multifamily, and they're all in the range of like 15 units to 25 units, sort of. And most of them are located in California, either one in Southern California and rest of them in Northern Central California. California is my main playground.
California has the reputation of being one of the most expensive markets in the United States, plus one of the least landlord-friendly markets in the United States as well. So that's why I'm saying it's a little bit counterintuitive. Why are you so enthusiastic about California as the place to invest?
Yeah, so when I started playing in California or buying properties in California, initially it started as just a convenience that I can drive to the property myself within a few hours, and then I can take a look at things myself. Because ultimately you have to do everything yourself, right? To make sure that
be hands-on.
Yep, hands-on, exactly. But then later on, I understood that California has its own advantages as well. Everything has pros and cons, right? And there are pros in one of the biggest sort of critique of California is that it has rent control. Mm-hmm. But people don't understand what that exactly means. And how does that affect your investment, really? And when I studied that, I realized that, it's actually not that bad at all. And I can give you a concrete example of it.
Please.
For example, in California, there are 2 kinds of rent controls, right? One is a statewide rent control, and other is some cities have their own more stringent rent control. For example, Los Angeles itself has its own stringent rent control. And maybe Oakland, California has its own rent control. Berkeley, California has its own rent control. And those are smaller, 3-4% rent controls. But the statewide rent control in California is actually pretty liberal. What it says is that you can increase rent by 5% plus CPI. And CPI is the inflation index.
Wow.
And so let's say the inflation currently is about 2.5%. So then that means 5 plus 2.5, which is 7.5%. That means you're allowed to increase rent by 7.5% every year. And 90 to 95% California has this rent control in place, not the more stringent rent control in place. So now understand, 7.5% increased allowed every year. Now think of this, like that's a lot of rent increase. Like
market rent's probably not increasing that much per year.
That is correct. Absolutely right. Market rates are probably not increasing that much anyways. So where is the problem? I didn't see any problem here. Right? I thought that there is no problem. Like it's convenient.
Well, the advantage is everybody else gets scared off when they hear rent controls. They don't take the time to study it. You took this time to study it, so you understand it's really most of the time not that big of a deal. Okay, Absolutely. What are some of the other big advantages in your mind of investing in California?
Well, so there's actually one interesting advantage that people overlook often, and that is property tax. So what happens is in, let's say, Texas or some other states, right? Property tax gets adjusted every year based on the market rate. So if your property increased in value, then your property tax is also going to increase in value a lot. And this happened in Texas in a massive way. Because what happened is there were people who bought these homes at $100,000 in the early 2000s or even early right before that in 1990s. And the values of those houses are $500,000 now. So that means they are paying 5 times property tax on it, which is they basically had to sell that house. They couldn't even afford that. They were not making that much money. And the same is true about multifamily as well, right?
Yeah, that's hit a lot of multifamily investors the last few years.
Right. In California, what happens is there is a limit on how much you can increase property tax by. It says that even no matter how much the value increase it, we're going to take only 2% as the maximum value increase. And based on that, our property tax will increase. So they will inflate your value only by maximum 2%, not more than that. And they will charge you that much tax on it with the same percentage tax, right? So the property tax can probably increase just by 2%. That's it. So that is a huge advantage. And that's why in California, you have a home and you maintain it for you're living in there for 10, 20 years. You're paying really, really cheap property tax. Like it's peanuts, essentially.
Yeah, it's not, because again, a lot of areas in California is so expensive. The whole housing prices are so expensive. There's no way the average person could pay property taxes on a $2 million.
Correct. If California starts charging by appreciation, a lot of people will go out of business.
Oh, yeah.
And so this is another advantage of California, which is, and there is actually a third advantage as well, which is you can see in the other states like Florida and Texas especially, right? There are boom and bust cycles, right? Their property prices either go up pretty high and then they go pretty down. So they keep going up in waves. Whereas California is very steady from price perspective. The prices keep going up in a steady way. And the volatility in the prices is not there that much. And that is another advantage you have in California. So there are advantages in California as well, which people overlook.
Yeah, well, that's good to know. That makes a lot of sense. So, Vaibhav, you've got 6 deals under your belt these so far. Are you going into these projects as the primary sponsor, or are you going as a co-GP? How do you typically structure your multifamily deals?
Yeah, so I'm the primary sponsor, but I have also partners with me. And these partners help me in various, we are all together GPs. Right now, currently, we have a team of 4 people. And all of us are partners. And I'm the primary one. I have a most experience in all of them in a multifamily space. And then we simply do multifamily syndication. And that means we take some fees, we take some equity, right, in the deal. And then we get the rest of the stuff in the limited partners. So just like any other multifamily syndication out there.
Yeah. Okay, well, that brings us up to the other way that you're a little bit counterintuitive. So number 1, focusing on California, where a lot of other people are scared of California. And number 2 is who your avatar is as your ideal investor. Tell us a little bit about who you've seen the avatar be for a lot of other syndicators and who you focus on instead.
Yeah, it's very interesting. When I got into multifamily syndication, right, I saw that people, all these syndicators out there were targeting people that wanted to become real estate investors themselves.
Yeah.
Right. And I just thought that something doesn't make sense here, because if they want to become real estate investors, then they will be active people and they would actually want to become GPs eventually. Right. So targeting them may work, may not work. To me, I wanted to target other people who did not want to become a GP one day, who just wanted to invest in real estate, but not necessarily be active. Now, my theory is that everybody needs real estate because you need some sort of diversification, right? Yeah. So if everybody needs real estate, why don't we just target people who have money and who need some real estate exposure instead of people who are already interested in real estate and want to become investors or GPs, right? So I started targeting certain people, let's say a demographic, let's say about people about 35 years in age, and especially people like me in technology field, who has kids and they don't have time to actually do all of this themselves. They don't even have interest in doing it, right? So that actually started working really well because these people had no interest in doing it themselves. And when they saw me, which is also come from the tech background originally, they thought we could trust this person because I could speak their language in a way, and explain all of the real estate stuff in their language. So that was one big difference that I did is I just started targeting people who were, and there is another interesting thing happening in the United States as per laws are concerned, right? So multifamily syndication was was only limited to certain people until like up to say 2012, 13 or so, right? It was meant for what's known as accredited investors or richer investors. Right. But if you look at the history of syndication, and what's happening is the government, the successive government, whether it's Democrat or Republican, right, are trying to democratize investment in syndication. And that means what they're doing is they're opening it up more and more. So, for example, in 2012, there was Jobs Act, which President Obama passed. And in that act, or he signed, in that act, he democratized it further and allowed online offerings of syndications, right? And at that point, they also said that now you can advertise deals using 506C, right? So that changed. So you can see, and even there have been new rules that are going in effect literally this year from the Trump administration, which are going to make these investments even more democratized, where they're going to say they're going to allow 401ks, their retirement savings, to be invested in these kind of vehicles, investment vehicles, right? So you can see that it's democratizing. So it's not. So that's why it is important to reach out to all these other people who had no idea about syndication. Yeah. Then limiting it to just few rich people who are solely interested in real estate.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
Well, yeah, not only that. So what you're saying makes a ton of sense to me, Vaibhav, because, yeah, I saw the same thing. You get all of these people, these gurus would attract all of these people interested in learning about how to become multifamily investors. In the back of their mind, the guru already knew 80-20, right? 20% of them will actually get active and start doing it. But the other 80% are interested. They drank the Kool-Aid. They just don't have the time to do it. So they create these communities and people start combining forces and doing deals. And it all sounds good. It was good for a while. But like you said, it becomes kind of a Shark Tank. So you got everybody trying to get the investor people out of these groups and get the capital out of these groups. So I remember one acquaintance of mine, he was part of one of these communities. He invited his doctor to check out this community because he was trying to get the doctor on board as an investor with him. Somebody else scooped up that doctor, got him on board as an investor in their deal, and my acquaintance lost out. And that happens over and over again. And then the other side of the coin is, that was all good while it was go, 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 go time with multifamily. When the crap hit the fan a couple of years ago, then a lot of those sideline investors got scared and went away. So now it's very difficult to get more, water out of that stone, so to speak, because a lot of the people that are LPs and deals from a year or two ago are kind of stuck with these properties that are either going under or they aren't distributing or they've had cash calls. So they're scared. So your way is really, really smart because you're going after, what do you call it? The blue ocean, right? Going after fresh people that aren't that aware of real estate, probably don't have a clue about multifamily. And you're the first person with your foot in the door with those people. The disadvantage is you kind of have to educate them about
Correct.
real estate from A to Z. You have to kind of build up that know, like, and trust factor, not just about you, but about this as an investment class. Especially the tech field, they're used to seeing IPOs and they're reading about all their buddies being part of these companies that are worth $1 gazillion, and they're hoping that that'll happen for them. And so you got a few things to overcome there, but I think it's really, really smart.
But there are ways to do, for example, right? One interesting thing is that this whole model is extremely similar to VC investments, like how the people invest in tech companies as well, right? Through secondary markets. And the laws applicable are also exactly the same. So what I do is I take the parallel between them and the VC investor. And if you're addressing the tech community, it works really well. And another point I wanted to make was, in business, there's a concept of TAM, right? What is your eligible market? So now if you try to address the ones that gurus are addressing right now, it's a smaller TAM. Eligible.
Plus, you got a ton of competition.
Everybody says this is a way bigger TAM.
Yeah.
It's every single person that has money sort of is eligible for your TAM, right?
Yeah.
So what I'm trying to do is just address the bigger TAM, and I'm willing to put upfront work to educate them because I love that as well. I don't mind doing that. And then those people will convert at some point, and then I'll get the rich dividends of it.
So talking on a tactical side of things, Vaibhav, what do you find as of 2025 is working best for you for connecting with and generating investor calls with new people?
Yeah, I think one of the best thing that is working is LinkedIn.
Mm-hmm.
LinkedIn is working really, really well. I'm very active on LinkedIn. I do all sorts of. I make sure that I post at least twice every week about various things that are going on in my life. And really, my main thing is to develop trust with these people. Is to really be authentic and just show them how I am, what I do, and then that works. That works really well. And of course, I have a podcast, a website, blog post. All of that is also there. But I think LinkedIn is working really, really well for me.
Wonderful. So once you get somebody into your world, I think you also do a very good job of staying in touch with them and educating them and keeping the communication going. What do you like to do besides posting on LinkedIn? What else do you do for people that are in your world? So potential investors.
So the first thing I really do is to do a call with them and explain them this whole world. And then I send them resources around the internet that are not necessarily generated by me, but even generated by other people, to prove it to them that this is a vehicle that is proven vehicle that's been there for hundreds of years, and just research on internet. Like, you don't have to even trust me, right? And they do their own research, and then I make sure to send them. Then I keep in touch with them by two ways, right? One is through LinkedIn itself, right? And the second way is by saying an email newsletter every 15 days. Right?
Twice a month.
Twice a month. And in that email newsletter, I don't just put real estate stuff. In fact, I try to only put one thing about real estate, but mostly the stuff is about life or something interesting that's going on that will be appealing to them. For example, I once sent them, like most of these people are around certain demographic, right, certain age. So I was sending them resources about how to educate their kids, which are teenagers probably now, financially, right? I send them a course that, hey, my kids are taking this course. Why don't you try this course with your kids as well to educate your people on financially, right? So there's a lot of that. I try to understand if I am of their age, what do I need, really? Mm-hmm. Is there a health advice I can give them? Is there a book that I've read? For example, I send them like a book advice. Like I just read like a book called The Good Energy from Dr. Casey Means. right? So I'll share that with them. So there's a lot of stuff that they are likely to be interested in. And I share all of those things, not just real estate. I try to give them some value, that's something that'll be useful to them instead of
So
just
they'll actually look forward to opening up and reading your emails.
Yeah, exactly. They need to get some value every time instead of just doing them real estate. Because with gurus, it's different because their TAM is just the people who are interested in real estate.
Right.
So there has to be more real estate oriented. Whereas mine is a larger audience, and hence I have to do a little bit differently.
Yeah, most definitely. What kind of feedback have you gotten from people about your newsletter? It sounds like
It's interesting because I get these. So one of the tough job is to be in touch with them, right? And what I saw was that sometimes people randomly call me and they have my number and they're like, hey, I really like this article. There was a guy who called me literally 2 days ago, and I had put in Perplexity Comet as a browser and my experience about using that AI browser. And he called me and say, I really like that. I started using Comet after that, browser after that. So you can see he actually got value from it. He learned something new and he started using that tool that I shared with him. So they keep in touch with me, then I have to keep in touch with them. If I give them genuine value, then it works that way.
So when it comes time when you're looking to raise capital for a specific deal or a project, how do you go about that? How do you get the word out to your list about the...
Yeah, so the email is one way. Yeah. All of my deals have been sold about 56B. That means I didn't have to even do 56C because these people who are already in touch with me, or I have a pre-existing relationship with them, they are available to me enough in numbers so that I don't have to even tap. But my next deal probably will be bigger, and because every deal we go bigger and bigger. So it will be 5 or 6C. And at that point, I'll deploy LinkedIn and social media as well for advertising my deals. But right now, it's limited to the select email list just because I get enough investors from there.
Yeah, very nice. Vaibhav, this has been fascinating. If people would like to connect with you and find out more about what you're up to and maybe get on your list, where should they go?
I think the best way to do it is my website, oldmoneycapital.com. There is a way to subscribe to our newsletter there. And there's also a contact us form. And if they email me through that, I'll get in touch with them. I can share my phone number with them, everything with them. And then we can start the dialogue.
What's the URL again?
oldmoneycapital.com.
That's a good name. Vaibhav, thanks very much for being on the show. This has been great.
Thank you very much, Dave.
All right, everybody, take care. We'll see you on the next one.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.